If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? Welcome to Weekend Recap on the Courtside Financial Podcast, a segment where we bring you a compilation of everything that went down throughout the week from a stories perspective. Before we get into this video, make sure you hit the like button, make sure you hit the subscribe button, and click the notification bell icon so you don't miss out on any content that's coming in the future. So it kind of seems like any major new electric vehicle car company or new energy vehicle company is kind of in this war for survival right now. And next year is really going to be where we see companies starting to fail, in my opinion. And so NIO's stock price is a reflection of investor confidence today. It hasn't done so well this year, and it's clearly not in an uptrend. So the question we have for ourselves today is, has NIO truly fallen behind the competition? Is that what investors are thinking? If we go by the market, then you're not wrong to assume that that's what investors could be thinking. In October, NIO delivered 16,000 vehicles, marking a 60% year-over-year increase. However, when we look at the competition, XPeng and Li Auto have been gaining traction at an even more rapid pace than NIO. NIO's stock's clearly taken a beating. It's dropped from its 2021 high over 85%, and the stock hovers somewhere around $8 per share these days. So let's talk numbers. Returns for NIO investors, such as myself, have been a roller coaster lately. Minus 35% in 2021, minus 69% in 2022, and minus 19% this year in 2023. Compare that to the S&P 500 and it's a stark contrast. And even if you look at the PE ratio, which is a clear indicator in the stock market, it's 1.26. Compare that to the competition as well. XPeng and Li Auto boast PE ratios of 2.86 and 3.4 respectively. So right now the electric vehicle market is like a high stakes poker game. NIO is obviously holding its cards close. With the recent 10% layoff announcement and obviously a stock that's has seen better days, there's obviously questions that linger. Is NIO losing its edge in the electric vehicle race? What's the deal with the delays in the ALPS brand? And can NIO find its footing amongst the price wars? Traditional automakers like BYD and Geely are clearly flexing their muscles at this time. They're recording record-breaking sales. Meanwhile, NIO's market cap has dropped below $8 billion. And there's competitors who we've never even heard of showing valuations of $13 billion like Jai Krypton. Is this a clear sign that the electric vehicle giant is taking some steps backwards? As the electric vehicle market undergoes this sort of metamorphosis, survival of the fittest becomes more evident. CEO of Li Auto predicts a 3-year cycle of where new energy vehicle companies get eliminated from 2023 to 2025. We've already seen WM Motors file for bankruptcy not too long ago. This was very recent. Are we witnessing a seismic shift in the electric vehicle industry, and what does this mean for NIO's future? NIO's layoffs may be a strategic move to weather the storm, but the challenges persist. No one can ignore this at this point. With ALPS launching new products in 2024, can NIO regain its competitive edge that it once had? In this electric odyssey, the competition is fierce, and only those who can endure will survive. I surmise that one future is a future where we see ALPS begin to take more market share than NIO and really begin to lift the brand off the ground. I mean, if we look at Lexus and Toyota, the relationship that they have, Toyota obviously sells more cars than Lexus, and Toyota was a thing before Lexus. And you know why? Because there's a bigger market for the mass market. If we look at Honda and we look at Acura, if you live in the US, you'd clearly see more Hondas than you see Acuras, because not everybody can afford a premium vehicle. And so NIO kind of did things backwards, where they released the premium brand before they released the before they release the mass market brand for consumers. We'll keep a close eye on NIO's journey through ALPS. I think that's going to be very prevalent next year. And we'll see if NIO can pull themselves out of the fire and once again shine at the top of this game. This was our 100th episode. I hope you guys found it enjoyable. We don't sugarcoat anything. We try to get straight to the point. We try to give it to you as objectively as possible. And I hope you guys can appreciate that and find value in it. So everyone, it's time that we lift the veil. Did you know that Chinese cars are already in the US and they may have made a silent entry? In the third quarter of this year, BYD's electric car sales rivaled that of Tesla, but here's the catch. None of them hit the US market. We'll dive into that later, but first let's talk numbers. So why aren't these affordable Chinese cars lining up on your street? Well, it's pretty simple. The answer is cost. Thanks to Chinese government support, low labor cost, and speedy tech evolution, Chinese electric vehicles are doing way better than any other electric vehicles from a cost perspective. JATO Dynamics reports that the cost of what you'd see on a Chinese electric vehicle is about half the cost of what you see in the US and European markets. But the numbers don't lie, everyone. The Chinese electric vehicle market is booming, and that's no secret. China is outselling the West by a landslide when it comes to electric vehicles. It's simply because there's lower prices and a higher proportion of electric vehicle sales in China than there are in the US market. It seems like the West is playing catch up and the Chinese electric vehicle market is sprinting ahead in the EV race. Now let's talk about China's global ambitions. Chinese electric vehicles are cruising into the European markets at a rate that's raising eyebrows. China has a whopping 8.4% market share in European markets already for electric vehicles. So it's clear to see that the Chinese brands are making waves all over the world. However, there are storm clouds on the horizon in the form of European Commission investigation. But, and there's always a but, the US market is no joyride for Chinese electric vehicles, as we know. There's roadblocks such as high tariffs, not a lot of dealer networks, and the lack of Chinese brand recognition. The US has thrown up walls to keep these Chinese companies out, but will these walls stand tall forever? Well, what's next, you ask? Well, some of these Chinese automakers are looking to expand into the south, looking at places like Mexico to avoid some of these pesky tariffs for the time being. And in a surprising twist, joint ventures like we're seeing with the Stellantis brand might be the gateway to entry for a lot of these companies. Hold on to your seats, folks, because Chinese companies have already invaded the US market if you don't know already. Let's take a look at the Polestar brand, for example. Polestar is a Swedish brand under Chinese ownership. It's churning cars from Chinese factories and exporting them into the US. Even more, Polestar's plans to open up more US locations and start manufacturing in the US could give a company like Tesla a run for its money. These are all interesting things to consider, especially with someone like me being a NIO investor. But that's it for today's episode of the Courtside Financial Podcast. I want to know what you guys think. Do you think NIO will ever make its way into the US? Leave a comment down below. Do you think Chinese brands will start to infiltrate every market globally? I know NIO is an ambitious company, and the plan's always been for global expansion, not just to a couple places, a couple regions. The US is included in that. So NIO, a trailblazer in the electric vehicle industry, predominantly out of China, is focused on recruiting dealership partners to assist with its main brand and its sub-brand. Now, they're not just about revving up sales, but they're also about redefining the way that the automotive industry has been. And at this point in time, in this video, we're talking about how they're shaking up the traditional dealership model. And so let's dive into the details. So NIO is on the hunt for partners to join their sales network, and they're calling them Experience Center. Sneaky move, right? It doesn't seem like your typical dealership scenario. They want partners to handle their sales, their after-sales service, and they're even considering their battery swapping model as well. So buckle up, because NIO is setting the bar high. They're looking for partners with a minimum of 5 years experience in the luxury segment of the automotive industry. These facilities need to be strategically located, well-financed, and obviously up to par with NIO's strict standards. But hold on, there's a European twist. There were talks about NIO considering dealerships in Europe, but they later came out and clarified that the main brand would stick to the direct sales model. while the sub-brand codenamed Firefly would enjoy more flexibility here. Now let's rewind a bit. NIO has a history of trying out unique sales models. Remember the experiment where owners became franchisees back in 2019? Owners funded the construction of NIO spaces, and in just over a year, they built over 100 of them. However, by 2020, NIO shifted back to the direct sales model. It's like a chess game, isn't it? NIO strategically moving pieces on the board to try and stay ahead. And obviously that's what you have to do in this EV race where everything is pretty cutthroat. From direct sales models to owner franchisee experiments, NIO has had quite the journey, hasn't it? That's going to be it for this episode of Week in Recap for the Courtside Financial Podcast. If you found any of this information valuable, make sure you hit the like button, make sure you hit the subscribe button, and definitely leave a comment down below. Genuinely interested in hearing what you guys think about these this new style of videos that we're doing. Anyways, that's going to be it. I'll catch you guys next time.